Hello and welcome to Big Picture. I'm Vishal Dahiya, and today we're going to talk about the economic front. That is, how various indicators are suggesting that we are trying to shed the lockdown inertia slowly on the economic front. We'll try and understand what those indicators are pointing to, where we are right now in terms of an economic turnaround or going back to the pre-COVID period, and what more needs to be done on this front. So for more on this, we're joined by a distinguished panel of experts. Let me first introduce them to you, beginning with Professor Shamika Ravi, an economist as well as former member of Prime Minister's Economic Advisory Council. Also, we're joined by Mr. Dilip Chenoy, Secretary General of FICCI, representing the industry on our panel. And we also have with us Mr. A.K. Bhattacharya, the Editorial Director of Business Standard. Welcome all of you to Rajya Sabha Television. Let me begin with you, Professor Shamika Ravi, and let's start by examining these high-frequency indicators and what exactly are they suggesting in terms of a turnaround on the economic front.
Well, Mr. Dahiya, before a lot of disaggregated data becomes available, we have started looking at multiple different kinds of high-frequency data, and one which is now being looked at globally, and something now increasingly we are doing for India as well, is looking at the Google mobility data. These are highly disaggregated local level data. And this is very clearly telling us that across all states, there was a decline of about 75% immediately as soon as the lockdown was imposed within a couple of hours. By April, as the first lockdown was extended, the economic inactivity, let's say, went down to almost, negative 85%. But then we've had a slow recovery since lockdowns have started getting relaxed. So from early May onwards, we are seeing a recovery. But what is very interesting is, number one, even as of yesterday, we are still close to 30% down if you start pre-COVID time in terms of economic mobility. And these are particularly retail, recreation, mobility of people around to commercial centers. So these are good proxies for looking at what kind of economic activity is happening. Interesting thing is the variation across the state, that while we are minus 30 right now, the variations are very huge across states. Large states like Maharashtra are still very much down. It's almost minus 50% still. But what is surprising is that in states where the COVID infection is not that badly affected, in terms of the overall prevalence, where it is not very high, like the northeastern states, or for instance, like states like Himachal, etc. Even in those states, the economic inactivity is very high. And I think that is where we have to now consider whether we need a revamping, or let's say a new strategy for management of COVID, which can quickly help us turn the economy around, because clearly we have had one of the largest declines globally amongst other major economies.
Okay, definitely. You're right. In fact, the management of COVID is very closely intertwined with that economic recovery, which everybody is hoping for and aspiring for as well. Let me bring in Mr. A.K. Bhattacharya here. Mr. Bhattacharya, your views on these indicators and what they're suggesting here. Specifically, the GST collections are up. The railway freight loading businesses, bounced back again. So what's the macro picture we're looking at here?
Well, the data that you referred to, they do indicate that there has been a clear uptick in the pace of economic activity in these areas. I mean, you mentioned about the railway freight loading activities. Clearly, that when not only the volume but also the value of railway freights doing better than compared to what they were in September 2019. Now, similarly, the GST collections, for the first time in the last 6 months, you have seen an increase over GST collections in the previous year. That's a 4% increase. Similarly, you look at the automotive sector sales, you are seeing an overall car sale, passenger vehicle and other sector, the vehicle sales to around 30%. And if you look at just Maruti's, this is around 30% scale, which is the largest car producer in the country, is almost 50% of the total production. And also the data is, unlike in the previous thing, is very fairly comparable. In India, we have this Shraddh period when normal sales come to a grinding halt because people find buying things are very inauspicious. So I think last year I was looking at the numbers. September was Shraddh, and this year also September was the Shraddh. So if you compare September with September, you do get a clear indication of what kind of uptick you have seen in the economic activities. And one has to concede that the September numbers do show that, at least from the demand side, the worries are getting over. I'm not saying they've got over. The recovery may well be very patchy. It may be, only a phenomenon that we have seen in September. You still don't know what will happen in October or November. So from the demand side, yes, there is things have looked up in September. Even if you look at exports, you see that the exports growth of 5.5%, that growth is driven by manufacturing sector. And on imports, if you look at the contraction, if you look at the overall contraction, it is 19%. But if you look at the non-gold and non-oil imports, that contraction is lower. Now, which would mean that the recovery in the industrial demand side is also taking place because if you see the non-gold, non-oil import falling by only 13% compared to the overall import falling by 19%, you do indicate that even in a declining scenario, the non-gold, non-oil import consumption in the economy has grown. So on the demand side, things have looked up in September, but the real problem in the economy, which I leave and I will stop there, is that not in the demand side. The real problem in the economy today is actually in the supply side.
Okay.
If you look at the various sectors of the economy where industry is complaining about getting supplies of raw materials and other components, and even in the case of jobs, you do see a problem because the overall labor participation rate has come down to almost 40% from 43% pre-COVID, even though the unemployment rate has come down.
Okay.
So the real problem that I see is on the supply side and on the job side. And in September, certainly the demand side has given us some hope. And one only hopes that this demand recovery is sustained in the coming months.
Okay, and that's pretty much likely because in the coming months we have festive seasons coming along as well. So obviously demand might be on the upside out there, and these numbers do indicate that we're trying rather on the way to shedding that lockdown inertia there in terms of economic activity. Let me bring in Mr. Dilip Chenoy as well. For the industry perspective, Mr. Chenoy, as Mr. Bhattacharya is pointing out, as far as demand aspect is concerned, there is an upsurge out there. But on the supply side and from the industry's perspective, how do you see the way last 3 months or the second quarter of this financial year, the economic activity has moved along, and the way we are trying to move further into the third quarter as well with the festive season around the corner?
So Vishal, if you look at the demand uptake, as Bhattacharya talked about, was driven by the expectation of some consumer products, and they are manufacturing and addressing supply issues in anticipation of the projected consumption during the festive season. Mm-hmm. Right. So if you look at the auto numbers, they are wholesale numbers, they're not retail numbers, right? So therefore, because in the auto sector and the other sectors, there's a lot of pent-up demand. So the expectation is that over the next, especially in the festive season, October, November till about Diwali, there will be a huge uptake of these consumer durables and non-essential things or discretionary spend items. So we think that discretionary spend may go up here in festivals. And a lot of companies also are trying to facilitate that by doing rejigging the wage and salary thing to enable that to happen. But that's all manufacturer-led. In the services-led sector, because of the non-opening up, and now we are saying that only October 15th, cinema halls and the closure of schools actually impacts the whole publishing industry. People don't relate it in that way. The academic publishing is a significant part of the publishing and the paper industry. And the services are a big part of the economy. So if you look at all the, Google mobility indicators, right? And, Dr. Shamikha Ravi talked about in the beginning, in the retail space and the services space, it is still pretty negative. So I think with the Unlock 5 and with majority of the services being allowed to open and the numbers going up from 100 to 200, you will see, economic activity actually happening there and then leading to demand for other products. But if you look at some sectors of the economy, like Mr. Bhattacharya said, if you look at construction equipment, if you look at tractors, right, there has been huge demand for that, and there's seen as demand going forward. But one figure I'd like to just leave you with before I end is that, about 42 to 45% of the firms that Vicky had surveyed were showing, over 50% capacity utilization till August. That number is actually now gone up to 61, 62%. And I think when we get the numbers coming in later, we might see that happen. But again, this is just manufacturing based. It is not necessarily, services based.
Okay, definitely. The other sectors will catch up and are likely to do that, in the weeks or months to come. But that is going to depend on one very important aspect. And I'd like to go back to Professor Shamikha Ravi here, something which you brought out, Professor Ravi, in your initial comment as to how the management of COVID pandemic is very, very integral to, this revival or turnaround of various sectors in as far as the economy is concerned. And I remember reading on your Twitter timeline as well when you suggested about having a GST council sort of mechanism to go ahead and deal with, do a COVID management as well as far as specific states or specific areas are concerned. So what exactly are you suggesting needs to be done here?
Well, Mr. Dahiya, it's a large country. We are a federal democracy, which means, unlike China, complete containment of zones or states is unlikely to ever happen. So while Kerala has imposed Section 144, which is movement within, it is not going to be possible to completely block movement of people into and out from Kerala. In fact, the recent surge that we are seeing in the state of Kerala in the last 6 weeks is mostly on account of domestic migrants or domestic movement of people. And that's from the genome sort of studies that they have looked at, the strand of virus. Now, so we have to recognize the reality of our economy, which is that we have large states. And unless we have good control over the virus, in some of the strategically important states like Maharashtra, Karnataka, Gujarat, we are unlikely to see a pre-COVID type situation soon, meaning we can't dissociate the two things. So a GST council, the reason I'm talking about this is, the economic recovery pathway sort of goes through the healthcare or the COVID management strategy in the current phase. Now, some of the fear in the market is irrational. And that's why I brought out, the economic inactivity in states which are not very badly hit by COVID. I think that is partly on account of the fact that perhaps we are not communicating enough with people. Perhaps there is a lot of fear and panic, because of which, consumption is down, general economic activity is down. But there are many states, such as Maharashtra comes to mind on top of the list, where the testing efforts have been so suboptimal for the last several months that, the test positivity rate is now beyond 20% consistently for many months. 5 of the biggest hotspots out of the big 10 are in the state of Maharashtra. Now, I don't think the economy can recover without strategically important states like Maharashtra getting handled and managing this sort of infection well, which is why I'm talking about a council, because the health management of this current pandemic will require for states to really pool resources. And I'm not just talking about testing and treatment. It's also resources in terms of strategy. What kind of contact tracing is required? After all, at an all India level, we have peaked, Vishal. But all India level, we have peaked. But still, there are states, West Bengal, where the numbers, Karnataka, where the numbers are still increasing. And, a large federal country, we are unlikely to see an overall recovery till some big states continue to spiral out of control.
Okay.
That's why I think sort of a centralized, well-structured interstate council becomes sort of necessary from the economic perspective also.
Okay. So what you're suggesting is a coordinated effort is required here to go ahead and tackle this particular challenge of the COVID pandemic, because it's seemingly is going to be a long haul out there. Mr. Bhattacharya, the two more aspects, which are being talked about, if we are trying to look at a short-term as well as a long-term recovery period or turnaround of the economy. That is, one is export-based growth policy, and the other is the focus on informal sector, something which seemingly is evident in the recent policy announcements by the government as well.
Well, certainly. I mean, it's necessary to lay more emphasis on exports, and because that will also help create more jobs. And it's equally important that we should not ignore the role that the small and informal sector plays in an economy like ours. With exports, we need to be conscious that our import tariff policies need to get more real and get more rational, because given the import intensity of our exports, if you want exports to do well, you need to look at your import tariff policy fresh, because there has been a tendency to shoot from the hip and you raise tariff the drop of a hat. So I think if you want to do exports, then you need to look at an integrated policy on what you need to do on your import tariff policy. And in the non-informal and the informal sector economy, I think there is need to step up the kind of policy support that has come through various programs that the government has already announced. But the broader point that I would like to reiterate here is that the September numbers indicate a figure for only 1 month. So an important message from these numbers would be that the lockdown that was hugely successful in the first quarter, and as the lockdown was phased out, it seems to me that the economy is gradually coming back to its earlier levels. Now, that is something that must be recognized, but the danger is to be complacent and expecting that this will continue like this. So therefore, first important message will be not to be complacent, and the need for a stimulus measure, need to spend more money cannot be underestimated here, because you do need more expenditure, in particularly investment in the infrastructure sector, because if you do not invest more in the infrastructure sector, then you cannot sustain the kind of growth that you want to see, and you have already seen in September. And finally, my point is that a larger non-economic factor also needs to be taken into account, which is a kind of a risk aversion that you see in a situation of a pandemic. Now, the people who are creating demand, people who are providing those supplies are actually suffering from a huge risk aversion. And that is largely to do with the COVID-19. So till the risk aversion issue is tackled, I think we have to look at all possible options to keep the economy going in a manner with whatever measures that you need. So I don't think risk aversion has gone. Risk aversion will not go away till unless you have a kind of a vaccine, on kind of a recession in the spread of the disease. So till that time, you need to work on all the three, on the three areas, which is essentially not be complacent, come out with an investment stimulus, and three is attack and tackle that the risk aversion mentality does not grow, but is checked in good time.
Okay, definitely. These three are really, really important aspects, as Mr. Bhattacharya pointed out. Mr. Chenoy, from your perspective, from industry's perspective as well, what more needs to be done from here onwards? we are setting on the path to recovery. But as Mr. Bhattacharya said, we cannot let complacency set in, and we continuously need to keep up our efforts.
So I think, Vishal, just to rephrase what Mr. Bhattacharya said and take some points from Shamika Ravi, I think the first thing is we have to build back and build confidence that we are containing the spread of the pandemic. Two, there is enough, medical facilities and caretaking ability in the whole ecosystem. And three, that we are going to be in this situation for some time. So if we actually follow some simple steps, we can ourselves be the center of prevention of expansion of this pandemic. So that's the first containment and confidence that we need to bring in. The second point, and I think I'll just put it, is we need to drive consumption. Mm-hmm. See, a lot of the money that has gone into from the DBT has actually landed up in the bank accounts. People are not spending it. So if you look at another tranche of DBT to do that, it may not serve the purpose. So if we can say, okay, provided that you have spent X amount of DBT on Y goods, or you spent it, it's only when the next tranche will actually go in. And I don't know, it's difficult now, since one of the indicators that has happened is that the GST has come back to last year's levels, about 95,000 crores. Is this time for us to say, for a limited period of time, we are going to spur demand by doing two things? Last year in October, November, the government and the banks actually went out to give consumer loans to people, provided they actually spend them, and now at a lower interest rate, consumer loans for specific products to spur demand with a concomitant reduction in GST for a limited period of time. That could actually enable that to spur demand. In addition to what Dr. Bhattacharya said, you see, infrastructure, we are currently limiting it to 1.03 or 1.7 lakh crores, which are budgeted in the budget, right? We have to go beyond that number. You can't just say that, okay, out of the 1.7 lakh crores, we have spent 1.03, the other 0.6 odd are committed. But I think we need to look at that, because the only thing that was positive in the last few months was government expenditure, government consumption, and agriculture.
Okay.
So and the fourth thing, and this is most relevant, is linked to the third point. We have to expand credit and create a mechanism. As Mr. Bhattacharya talked about the supply side shocks. A lot of the small and medium businesses who are integral suppliers to the large are actually out of the banking system. They depended on other forms of finance. They were not with NBFCs. They were not with the banking system. For them to access finance and get this, the whole thing is not in place.
Okay.
And finally, I think the whole Atmanirbhar Bharat package and the Kamath committee reports and restructuring of loans, that should be done in a time-bound program. It's too open-ended at the point of time, and possibly some changes would need to come in there, because only 30 to 40% of the companies who are there are eligible for it. And that's kind of creating a converse thing. The banks are saying that the companies are not coming forward. So that's a catch-22 situation which you need to address.
Okay. Professor Shamika Ravi, your concluding comments specifically on those policy interventions which, as Mr. Chenoy is suggesting there.
Well, I do agree, Mr. Dahiya, with both other panelists. I think the government necessarily has to spend. I think we have to acknowledge the fact, and that has to be also conveyed very clearly to the people, that the government is committed and the government will spend. I think the best sort of the strategy for the government right now is to spend on infrastructure, simply because of the multiplier effect it has. Trying to stimulate demand through a UBI or a DBT is unlikely to lead to a spurt in demand, simply because precautionary savings across income groups have risen in this country. People are scared. People are not going to consume. They're definitely not going to invest. I think that is why the role of the government becomes paramount. And spending on infrastructure beyond the pledges that have been made, I think need to be now announced.
Okay, there it is. Thank you so much, Professor Shamika Ravi, Mr. Bhattacharya, as well as Mr. Chenoy for sharing your views with us and our viewers on this important aspect as far as the road to recovery is concerned. Definitely, we have started shedding the lockdown inertia as far as economic activities are concerned. But as one of our panelists pointed out, we cannot let complacency set in, and all stakeholders, including the government, the industry, as well as consumers, all of them will have to do their bit to try and ensure that we speed up this economic turnaround. And also, COVID management is an integral part of this entire process. We'll come back again with a different topic. Till then, keep watching Rajya Sabha Television. Thank you.